If you're considering consolidating your student loans to get out of default, let me explain how you would do it. First, you're going to go to StudentAid.gov. You're going to log in using your username and password. If you forgot your username or password, you can reset it by clicking Forgot Username or Password. You should be able to do that on the spot. Once you're logged in, you're going to go to Loan Repayment. And then you're going to select the last option in the first column that says Consolidate Loans. You will then go ahead and once you're logged in, if you're already logged in, you're going to hit Apply. For my purposes, I'm going to walk you through a demo. Assume you're logged in and you start the consolidation application. Here are the different sections that you will be covering through the application. You're going to click Continue. The first section is going to ask you to confirm your information. It's going to ask you to confirm your name, your date of birth, and your address. You can go ahead and update any of the information displayed here. The driver's license information, note that it's optional, so you don't have to put that in if you don't have it. I'm going to then continue. It's going to ask you for information about your current employment. If you're employed, you will provide that information. If you're not employed, you will be able to select that box to say that you're not employed. Once you complete that, you're going to continue. In the next section, you're going to be given the option to consolidate your different loans. If you have multiple loans, you can select the ones that you want to consolidate. If your loans are in default and only some of them are in default, you may choose to consolidate only those defaulted loans to get out of default. If you choose to consolidate all the loans that you may have, whether they're in good standing or defaulted, be sure to know the pros and cons of doing that. So once you have selected all the loans that you want to consolidate, here below they're going to give you the total loan balance and the average interest rate of all the loans you have selected. Next, you're going to be asked whether you want to delay processing of the consolidation. Generally, we do not recommend that you delay processing. The entire purpose of submitting the consolidation is because arguably you are ready to consolidate. If you're not ready to consolidate, you might as well just wait before you submit the application. So you would select do not delay and then you would continue. Next is going to ask you to select your student loan servicer. Your student loan servicer is going to be the company that it's going to manage your loans. Your servicer is not your lender. If you have federal student loans, your lender is the Department of Education. The servicers are simply contracted by the federal government to manage your loans. Managing includes sending you monthly invoices, processing your repayment plan requests, and any other operations related to your loans. If you don't know which servicer to select, you can do a little bit of research to figure out any ratings, any feedback that other people may provide. So once you select the servicer, you're going to be able to continue on. If you are pursuing public service loan forgiveness, you can go ahead and answer that question. And you're going to go ahead and continue. Here you're going to come to your repayment plan options. When you consolidate, you must also select a repayment plan, and that's going to be generated within the consolidation. You generally have two broad options. One is a repayment plan based on income and household size, and what we call a standard repayment plan. Know that for July 1st, 2026, moving forward, there are going to be less options for new borrowers. So anyone taking out loans after July 1st, 2026, they're going to be limited to two repayment plans. One of them based on income is known as the RAP plan and the standard repayment plan. If you have Parent Plus loans, after July 1st, 2026, you're only going to be eligible for a standard repayment plan. But for anyone applying before July 1st, 2026, again, you'll be able to select a plan based on income or a standard repayment plan where the payment is based on the total loan balance, the interest rate, and a predetermined payback period. Know that if you select an income-driven repayment plan, which is the umbrella term, and there are currently different repayment plans there, they're gonna have to verify your income information. So you can authorize that if you select that. If you are married and file jointly, they will consider your spouse's income to determine the monthly payment. If you are married but file separately, they won't include your spouse's income. So once you've selected your repayment plan, you're going to hit continue. Here in this case is modeling the different standard repayment plans. You can take a look at it. You can click on view details to better understand which repayment plan is best for you. Don't just focus on the total monthly payment. Do read and understand what the differences are. Sometimes the differences are, you have a lower repayment plan, but it's going to take you 25 years to repay it. So be sure that you understand why you're enrolling in that repayment plan and the repercussions short-term and long-term. Then you're going to hit continue. You will be asked for 2 references. These are not moral character references. These are people that they would contact should you default on your loans and they cannot find you, basically. So this could be family members, friends, as long as they don't share your same address. So in other words, you cannot put someone that lives in the same household. But again, there is no restrictions. This could even be a coworker. So you would be able to either review the references that are on file and update them, or add those references or more references. You will need 2 references. Then you're going to review the terms and conditions. The terms and conditions are really lengthy, but obviously you should take your time to read them and understand them. Know that at the end of the consolidation application, you will get a copy of the entire consolidation. So if you're completing the consolidation application, but you also want to read everything, know that you will have a copy of it and you can take the time reading it afterwards, even after you submit it. But of course, feel free to take your time to review all the terms and conditions. There's like a couple of pages of that. Then you just continue. Again, more notices. For purposes of this demo, I'm just scrolling down, and then eventually you're gonna come to a page where you're gonna review the entire consolidation application. You'll be able to review all the information that you put in there, and then you're gonna agree to the terms and conditions and continue there. Okay, so this is the summary of your application that you get to review. Again, it's all the information. I like to really focus on this section to make sure that you're including the loans that you want to include. If you're including them all, make sure you count the number of loans to make sure that they are all added in there. You can also just look at the total loan balance and say, okay, that seems right. Again, you'll be able to review all the information you provided during the consolidation application. At the very end, you're going to sign off on your application. They're going to ask for your first name. If you have an initial, middle initial, you would provide that, and last name. You're basically signing off electronically. Know that whatever you put here in your electronic signature has to match what FSA has on record. So if you don't know what they have on record, you can literally check on your own StudentAid.gov account in their settings, so to speak, to make sure that you confirm what name. They will be asking for a middle initial if you usually use your middle initial for loan paperwork. So after that, you're going to hit submit, and you're going to get here and it's going to say that it has been submitted. If you want a copy of your consolidation or you want to track your consolidation, you would be able, when you're logged in, to go back to your dashboard and be able to see it under your activity. You will be able to download that full consolidation application, again, on your StudentAid.gov under your activity. So this concludes the demo for consolidating. Again, reasons why you may consolidate, one of them being that you want to get out of default in order to get your loans back in good standing, and one of those options is consolidation. The other option that does not involve consolidation is known as rehabilitation. Be sure to know the pros and cons of rehabilitation versus consolidation in order to make an informed decision.